Last trading day of the year. And boy, did we get some chop so far today. We're going to talk about some of that. Hope everyone is doing well. I know it's a bit late a little later than usual, but run this into the close like we usually try to do on these Monday, Wednesday, Friday streams for Power Hour. So right now, we are looking at good old SPY. And you want to talk about just like chop. And we essentially got this week what I think a lot of us were potentially expecting anyway. Only problem was that in the moment, you start seeing, oh, we look like we're breaking down or we're breaking out. We look really weak or we close really strong. And we've just gotten a complete flip-flop of just a chop city. Like, if you were swinging overnight based off of how we closed one day, and then you're getting, bent left and right. And so I haven't done any of that stuff, but I've been chopped along in this choppy mess essentially this week. And so ended up being a pretty dud of a week, despite good opportunities, I thought, at least on Tuesday, Wednesday. And then since then, I think it's been a lot choppier for sure the past 2 days. Obviously, we had some nice moves yesterday, depending on what you were in. You could have had a nice chunk of change, but it was tough to play that because you're probably hesitant after how we closed the day prior. So it's just like a weird action. I think we're all really excited to get into the next year to get direction off this stuff. So we're in this little range from like this 378 up to like 383 on SPY. And here's the daily chart for SPY so you can kind of see what I mean. If you ask me, this does have the looks of a bear flag. We're in this consolidation, we're just in this zone, we're in this range. It's like, come on, give us something. It looked like yesterday we were going to break to the upside, the day before like we're going to break to the downside. Now today we're going to be pinned right in the middle, it seems like, into the close. I wouldn't be surprised if that's where we finish off today. So the keys for and going into next year, it looks like it's going to be a clean breakdown under this 378, 377 or so, for a move down 375 and then down towards 370 and upper 360s, I think is in the cards. Maybe a test of this bottom blue line down here, which would be, the June lows. We'll see if we get there. And then upside targets would be up towards, we get up over this 383, would be up towards 387, 388, and then into that death zone or this, chop zone of support, that turn resistance that we had for about a month back through November into December, which is up towards 390 to 390, or really from 390 up to like 395, to be honest. And then we'll see where we're at that point. What's going on, guys? Traded badly on the real account, killed paper. Yeah, it's funny how that kind of works, right? ASTS, perfect short attempt. Let's take a look. But I had a pretty bad, past couple of days. Look at that thing popping up off the bottom. Up almost to $5. It's got a gap up here to like 629, 630. So it's strong for now. We will see. Space Mobile Inc. Yeah, I would personally, I would like it a little bit higher, but you are up right against this area right here. So you're going to find something around this, 485 to about $5. It's your first key test, pretty much right where it's at, a little bit higher from here, another 20 cents on that thing. So today, essentially, or the past like 2 days, I don't want to say I've been fighting it, but I guess when looking back, when I review everything tonight and tomorrow, whatever I do, my plan is to probably review everything tonight. I want to do like a full-fledged review of like the past couple. I really haven't been day trading for the whole year. It's just the past few months. But really back from like October through the end of the year, the past like couple months, I'm going to do like a full review of all that. Try to pull as much data out of it as possible so that we're better prepared for, knowing our strengths and weaknesses into next year for that kind of stuff. So we'll see, but I played end phase today and lost. I played end phase yesterday and lost. So here's, I had a couple other little tiny things, but these are the two main ones. It just was a weak play to the downside. And yesterday I went to short it and I had next week expiration contracts. So I wasn't playing this Friday because if you were playing this Friday, what happened right here was just an absolute painful, 6 hours almost, right, of trading. It's just painful. Right? You didn't get a move. You're just consolidated. And so were we expecting big moves this week? We came into the week probably saying like, yeah, it's a holiday week. Probably not. But then you get a decent move down or up or whatever on a couple of these names, on Tuesday, Wednesday, like, oh, okay. And then now Thursday, Friday, you get just chop. And that's what we're getting on end phase, right? The past 2 days, Yeah, there's been moves if you were perfectly dialed into your entries, which has been key, especially during chop, right? The entry is key. But it's been just like these consolidation phases that go on for hours and just absolutely bleed out your contracts if you're playing, options on them. So that's been the recipe the past like 2 days on this thing. And I was looking for, what we saw was this opening pop right up in here that got rejected super, super hard. So I was looking for a short up against the VWAP. Obviously, that didn't happen. We broke above VWAP, came back down and had a couple pushes down, but I still got stopped out on that one. And then today, the same thing. I was actually up nicely on it initially. I was waiting for the Chicago PMI that came out at 9:45 Eastern, so I didn't touch anything until then. And I was looking for a breakdown under 263 on end phase, because 263, if we zoom it back, was the low right here back in, what was that, early November? And that was, I was looking down for push down towards like 255, even 254 was in the cards, the highs that we had back in here. So I was looking for a move down there. We got like a decent way into the 250s. We came down to like 258.80, not like that much, but we got a decent move down. The thing was that it just didn't really give me the move that I was looking for. I was looking for a bigger move based off what I was willing to risk. And then we came back up and I essentially got stopped out here on this blue line as we broke above. We ended up holding that level and then falling off a little bit, but good that I got stopped out, because either way, I would have gotten stopped out later on, which right now, or the contracts would have bled out, a decent amount. Now, of course, I still playing next Friday, so it wasn't like, oh, they're going to get just absolutely killed with theta decay and other forms of decay, but that was it. So, I guess my biggest thing at end phase is I've watched the past couple months, and I felt like I've had a good feel for it, but realistically, when it comes down to the executions, I just don't really think I have a great feel for it. So probably not going to be touching this one for a little bit. So we'll see. That's the plan, though. Testing out the super fast SPY using stochastics, VWAP, MACD, volume profile, been for fun scalping. Interesting. Yeah, especially these past 2 days, or really, I guess, past 2 weeks really. The scalps have been where it's at. I have been off this week because we have not really gotten much follow-through moves, or at least I haven't been in a position during some of these big moves to the downside or upside. I was in the wrong spots, I guess, at the time, so I didn't capitalize on that. I'm pissed off on Wednesday. I think I had a really good Tuesday, and I'm pissed off on Wednesday because I had this level charted out, and I think I went long meta because it was looking decent, and it held up decent, and it ended up, meta ended up going on Thursday, I believe, yesterday, ended up ripping to the targets that I was looking for, but whatever, it is what it is. But SPY, the better play was, or the better trade probably would have just been watching SPY and a test of this 383. Once we could not break that, there was, bear flags in there. There was opportunities to play VWAP rejections, big time wick here. There was a lot of signals that we had on Wednesday of downside, and there was a nice chunk of meat on the bone there that I just completely missed. Had it charted out, had it planned out, had it written down, like, okay, SPY, 378 and then 383, like those are my levels. If we reject here, then shorts. If we bounce here, then longs. And we pretty much got exactly off my lines, like the exact moves. I just at the time wasn't zeroed in on that. Wasn't at the desk at this time, but also was watching this time and just missed it. Sometimes it's how it goes, right? But the biggest takeaway, I think, for me at least this past week, was like not being dumb and chasing and then just blowing in the account, not blowing the account, but blowing more money than we had to. When realistically, move on, you take a little bit of a loss, right? Done well this past month. Next week is a new year. We begin a new year, and hopefully we get some more direction. It's not going to be a holiday week. We get some more volume in the market again to start the year off right. People looking to start the year off right. So we'll see. We shall see. Burnt badly on SPY this morning, went below 380. Yeah, it was just trappy. And again, same thing here. I think I was just came back from the gym and I left and I had a SPY long. I had a SPY long as long as we held VWAP pretty much. I forget where my stop loss was. I just put a stop loss and left because I'm like, it was just shopping for like an hour and a half. I'm like, I'm not going to sit here and watch this crap. So I'm going to leave, put a stop loss, and that's it. Hits the stop loss as I'm at the gym. Okay, fine, whatever. And then, thought, okay, this doesn't look good. We're going to come down, maybe test that 378. Dare we say go lower? No, what's happened? The past, past hour, we've gone from 378 like 50 up to now 38, almost 381. Get screwed, right? It's just that's what it's doing. So it's like, is it worthwhile to chop around? At this point, looking at it now, we might now get a decent move into the close, but earlier, I guess today, New Year begins Tuesday because markets close on Monday. For those who don't know, I believe I'm like 99% sure it's closed on Monday. So New Year begins on Tuesday, and we'll start fresh then, and hopefully get a break out of this consolidation, this stupid consolidation on SPY. Hit the max loss 30 minutes in. That sucks. Today, 50 moving average cross the 100 moving average on SPY daily chart. You would think that means, I got my moving averages off for right now. I haven't been looking at them super, super close. But you would think that's, well, not think, it just means that there's short-term bullishness, I guess, relatively speaking. Market closed Monday. Yeah, I believe so. I've been getting Webull has been notifying. Webull's got some decent notifications, although I will say that they tend to annoy me a little bit with these, like, check out the top options of today. Like, I got the point here. If I want to check them out, I will. Those alerts kind of piss me off, but I've been getting a couple notifications from them, and it's like, market's closed on Monday or holiday, So I believe I was like, I'm not going to just go off of Webull, but I'm assuming they're probably providing accurate information, but I wanted to double check, and I believe that's where we're at. So Tesla's up today, believe it or not. So SPY's down 0.67. Yeah, but again, I want to mention this too. Like, back to the past couple of days, if you were like pissed off at this week or whatever, and you're like watching it like, this kind of sucks. I mean, look at where we closed. We closed below the low of the range, the relative range in the past like 2 weeks on Wednesday. That was a nasty looking close. Well, guess what? We gapped up on Thursday morning, closed above the high of this range, above 383. That looks bullish to me. And then we gap down. Like, it's like, oh my gosh. It's just, we're getting the opposite of what the end of the day momentum shows, or that daily momentum shows. We're getting the opposite the next day, like gap ups, gap downs, like absolute chop, absolute, pull your hair out type stuff. But are we super surprised during this, lower volume holiday week? Looking back, not really. XBI is green today. Look at that. That's interesting. That really came on strong here to finish off the day. XBI is green. TLT, this is red by about 1%, but it's trying to build a base around the 99, 50 or so area. TLT doesn't look too good, to be honest, chart-wise. So maybe this thing breaks down and we see the 10-year pop into 4%, something like that, and be even higher, dare we say. But it looks like it's maybe building a little bit bear flag. Right now on TLT, your resistance level is 101. That's your 50 SMA as well. There's a gap to fill up to about 102. So there's some, TLT could be an interesting play. The only problem is that it's not going to play as nicely as other stocks based off of the market moves and stuff. So it's a little bit more difficult. You're kind of just trading, you're trading bonds. You got to have a better feel for bonds, I would think. So don't going to be so sad today. Have a green month at least. Yeah. I'm going to take a step back sometimes and look at it. I had a really good month. I keep saying Monday, Tuesday. And I remember saying on Tuesday, like, like if I look going into this week, the P&L that I had on Tuesday, if I had that by the end of the week, I would have been really content with that. Would have been awesome. I thought at the time, because of the short week and I wasn't expecting much, we proceeded to give that back. Just getting chopped little by little. So it is what it is for now. I'll go through all the, my plan is for tomorrow, I'm going to go through all the accounts for the past month. Well, the two main Webull accounts, and then of course the Robinhood, cover everything and see how it all played out. Was green across both Webulls. I believe the Robinhood's red, if I'm not mistaken. Let me just double check right here. I'll show all the numbers tomorrow, but I believe it's red in the month. No, actually it's up on the month, believe it or not. Barely. It's barely up on the month of December. Interesting. It was up higher mid-month, and then it's been kind of coming down really since past like 2 weeks, which is not surprising based off the market the past 3 weeks or so. I finally got a a floor mat for the chair that I have, because like you can see this carpet behind me. So I was like, oh, this kind of, because my old apartment wasn't carpet where I was, essentially it was on hardwood where I was. And I was like, okay, this is rolling around fine. But then I'm on the rug. I'm like, oh, this is kind of a pain to like roll around. Now I finally got a mat for it. Volume on Bolt and LHDX. I want to check out the small cap list. Oh, let me just pull this up so you can see the price of whatever we're talking about. Okay, small cap list is now in the top corner. Look at Nile. Look at that. 22% day for Nile. Some good volume there. I wouldn't touch that with a 10-foot pole, but it's been one I just keep in the watch, because I think it's kind of funny how bad the CEO or the top insider buyer has been buying since like $3. It's now worth 10 cents or 12 cents. He's just tossed millions, like I'm not even kidding, millions and millions of dollars into that thing. But I'm sure his average is now like sub $1 now, but my goodness. Let's check it out. Bolt. Yeah, that volume is really interesting on Bolt. That's a lot of volume there past couple weeks. And some of those pretty big wicks. I might add that to my list. Yeah, some very big wicks to the downside. Add her to the watch list. Bolt. Yeah. And then what was the other one? LHDX. Yeah, that one's on the list already, but that one has had some good volume really as of late too. Yeah, new low hit today, yet the volume is just pouring in on this thing. You know what I also saw was JSPR. JNCE was the one that went like 100% this week on like Tuesday, which has also contributed to the strong start to the week. This one had some crazy action because it's one of the ones that I'm in. I'm playing 3 at a time. That's how I'm going to do it when it comes to these like small caps. For now, I'm going to give it the next month. As we get into February, like we'll see. Or like, of course, it comes down to the overall market conditions. If the overall market conditions start to get really crappy again, I have no problem just cutting off all the small caps and just waiting for better, swing conditions to start swinging again. But JSPR traded 900,000 shares yesterday, and this thing, had previously been averaging, 30K shares back here in the summer, and back in May, 5,000 shares a day. So it got some crazy volume yesterday. It's been already getting some very high relative volume the past couple of weeks, really since the beginning of December. And then when you get this like wiki type of action, what this is just, in my view, complete manipulation, stop losses getting hit, and just like weird action where you have market makers trying to pull it down to, and of course, there's no one knows what's actually happening behind the scenes here, but it's not a coincidence that you see charts that look like this all the time. And then all of a sudden, like within a week or two, sometimes, relatively soon, even the day after a crazy manipulation day, the stock is getting pumped. There's, positive news, or the thing is up 100% the next day for whatever reason. Like this is just a common manipulation that we see. And we're seeing it again here. So it's spotting that manipulation by using relative volume as your scanner or as your screener to your advantage. No guarantees that it's not going to always work, which is why it's a very tough trade, because it's not like your traditional, I'm going to risk this price, or I'm going to risk this level. You kind of have to enter very carefully, bid carefully, and then when you enter, like you have to have a decent leash. And maybe that you find that, based off of your criteria for entering is after some big manipulation type days, I thought maybe to myself, maybe 25% is like that cutoff, right? The thing is, you can easily find yourself down 25% if you buy at the wrong times. Like if in this relative, manipulation, if you happen to buy 60 cents on this stock, right now you're down 20%. You could have been down yesterday 30%. So that's the caution that you have to be careful of. You don't want to be buying, the relative top of that unless you're willing to give it, a bigger leash, or you buy a small position and you look to add a little bit more on a bigger dip if we get it. But I think a good rule of thumb, if you're buying into those flushes, into those new lows, into what looks like manipulation like this, right? Because the stock trades, a certain way all year or the past, couple months. And then all of a sudden there's some weird action, high volume, something's going on. The stock's got plenty of cash. There's nothing fundamentally that's like super different about the company now than what it was 3 months ago or 4 months ago, whatever, when it was trading up here or when it was trading normally. A relative 25% stop loss could be a good idea. And that's kind of like the general rule of thumb that I'm going to be following. is as long as I get my entries like decent, a 25% stop, and then we're looking for 50+% ideally on these names. And many of them you can get more. Let me look at that JNCE. JNCE, I believe, was more than that. And that's also, it's actually holding up pretty well. It might even go for more. But if you got this, I think I got this thing around 70 something cents. I didn't get the absolute bottom. I was in like around maybe 75 cents, something like that. But it ended up hitting like 160 in the after hours on, was that Tuesday? So that was, over 100%, 110, 120% on that name. It's even from that average to right now, it's 45%. 50 SMA was over 50%. So like that's a good target. I think of like 50-ish% is like the first, is where you're looking for like the majority of your profits to be taken off if it's not already up more on a spike, or if you can catch it at the right time. Of course, sometimes these things move very, very fast, and then a rough risk of 25. Sometimes we get a lot more than 50%. Sometimes, it might spike 25, 30, 40, 50, and then just dump right back down. As long as you take something off, like you're probably going to be in a good spot. So that's like kind of like the rough idea of how I want to play these. So we'll see. But like an example like ACHL, like for example, this thing, look at this freaking volume. My goodness. Like what the hell is going on here? I don't even know. But this is an example of one that's like, okay, well, you can probably say like this wick low to 75 cents. If that breaks, that's probably not a bad stop loss unless it's a quick like wick down below and then a bounce back up. I would never actually put a stop loss on, because that's essentially, if you're putting a stop loss on these things, like a physical one. Now, because you can't use heavy size, right? You have to be very careful with the sizing, because of course anything can happen. But when you use a physical stop loss, you are literally putting out a fat worm into the water that's just wiggling around right on the line into a huge pond of fish, and you're asking someone to come in and hit your stop loss. You're asking a market maker to come in who can see all of our stops. You're asking them to come in, if they are gonna run this stock, come in and get that all-you-can-eat buffet of shares, because they just see your stops, grab those, hit those stop losses, and then the big orders come in underneath that, scoop back up, and then they have cheap shares. Like that's how these things work. Not every time. They're not always going to be like that, but when we have this crazy volume, I mean, that's a pretty solid guess for what's going on the past couple of weeks on stocks like this, especially after getting just absolutely reamed, the past few weeks and getting killed on these charts. So risk reward, I love for these type of plays. Again, small size. And for me, I'm doing 3 at a time. You might have a basket of 5 at a time. Some people might like to go 10 at a time. I used to be the one that was like, 10 at a time, all small size. And, you have a bunch of lines in. The problem was that you find yourself in a downtrending market or, whatever, and then you're down huge because now that 10 stocks, it's a lot more money spread around. But if the overall trends continue down, that's all going to bleed. So that's what I think is working for me, at least mentally, on these names, on these plays. And it allows me to not have to care at all. Like I literally don't care. Like if it could go down 25%, I don't care. It's not going to make or break it the day or the week or whatever. So that's how I view it. And that's how I'm going to play them for now. Look at this SPY though. It's back up to towards the highs of the day, right? Yeah. Look at that. If we get going here, well, it's only got 15 minutes left. I was going to say, if we get going, we can, look at that. Look at that candle. I mean, maybe if it really gets going, we could squeeze into the close up to that 383. That's the gap. We gapped down from 383 down to wherever we opened up, around 381. So there's about a $2 range, from this 381 to 383 roughly. Maybe we can get there. It's 15 minutes. It would be pretty impressive, but we've seen crazier. Averaging into wing, pretty nice spot. You take a look at that. Happy New Year. You guys too. I hope we can keep the streams running and hope we can get a lot more of them at different times. Like I wouldn't be opposed to doing like 2 a day sometimes, like one like around power hour and then one at night. Maybe like shorter versions of them, but I think that should be it could be a fun thing to do just because we can get more people in the streams at those times. And then we'll consider maybe some morning ones in the future as well. But I hope you guys have a great New Year as well. Mesa finally waking up the past 2 days. Remember that? Oh, man. That one burnt me too. That airline trade was like, I have to say, one of my biggest, well, everyone's going to have, a bunch of bad trades. Yeah, that thing is definitely perking up off those lows. My goodness. Little final flush, little pop off of $1. And now I hit up to 170s today. Jeez. But the airline trades, geez, man. Which is a lot of that stuff this past year is why I stopped caring about swings as much, because we're trying to guess where we're going to go in a specific window. You can get yourself really, really stressed out about that stuff, and it's just not, and it's just not worth it in my view. So when it comes to swings like the small caps, that's a different story. I'm talking about like, if I'm going to buy, this sector or this stock and buy, an option that's has an expiration of this date, that means I think it's going to move in this period of time. We've learned that this year, at least I've learned, that is not necessarily a consistent strategy by any means. Strangle on SPY at the opening held. Nice. I think, to be honest, the strangles and straddles, like that is something that I might want to be looking deeper into the new year, especially at like crucial points. Now, of course, if you get caught up in some chop, if you're doing it for day trades, even better too, right? If you're at like a crucial breakout or breakdown point, like if we're just kind of in a wedge or consolidating, or like you're expecting a decent sized move, it's not bad. And especially when the VIX is kind of low, which right now is not a bad time when the VIX, because the VIX hasn't been doing very, very well. Here's the daily chart on the VIX. The VIX can't get above this 2250. And as long as the VIX stays below that 2250, that's like kind of like the line in the sand that I've been watching closely. Under that, it's longs are not necessarily a bad look. And then playing stuff like that, straddles or strangles and stuff. I potentially want to do more of that stuff into the next year and utilize it more. And I think it's a good strategy, because you're not looking for the home run 1,000%er that has to be like kind of a directional move. No, but you can go grab that, 10, 25, sometimes 30, 40% type of play, and you have yourself, and you're doing exactly what like trading is, where you don't have to hope and pray and necessarily predict the outcome to win. Look at this move on SPY, guys. This is actually pretty impressive. I'm actually very impressed by this move. So another day where it's like, we started to break down under VWAP and we start going to new lows, and it's like, here we go. Might test those lows of Wednesday. And then we snap back up, and now we're potentially going to fill the gap back to 383 in the last, 20 minutes of the day. Like, my goodness. Talk about chop. Talk about chop. F and Mesa, yeah. JetBlue did me dirty too. Well, I did myself dirty, but was wrong on that. Here's what it is. It is what it is. That's why I like the plan, at least for myself. I'm glad that I was more so thinking that this is going to be something that we do towards like next year, later on this year. I'm glad I started doing it sooner, because number one, I've actually made more money in the meantime. And then secondarily, I've gotten a good head start on like, a new strategy or a new way of thinking about things, which I like a lot more, of trying to create a system that we can replicate day to day. You don't have to trade every day, but day to day, when you're looking at stuff, looking at the market, which I feel like I've got a pretty good handle on. Of course, there's a lot of little, quirks that we got, and kinks that we can move, that we can kind of get out of the past couple of months of trying this stuff out. But I think that paired with the longer term kind of portfolio, where we ideally just kind of funnel money into those high dividend plays, we sell covered calls, weigh out the money just to kind of cash flow like a few extra bucks, just like a dividend into the portfolio each month or each week if you can. And then inside of there, that's where, maybe leveraging off of some of the 3X ETFs. If you are, I don't want to say biased, but if you're looking for some sort of like directional move, but you don't need it by a certain time frame. Yes, there's decay in the 3X ETFs, but if you're generally right, the general move, you get the general gist of what's going to happen in the macro, you're going to be fine. Just like the whole TLT and TMF. Like TLT, again, I'm not worried about TLT. Like I have a TMF, which is like the leverage play of TLT. It's, into next year and potentially beyond. Usually things take a little bit longer than to play out than we think, than we want, when we initially think about the idea. Like this is 100% the recession hedge trade, because if we go into a bad recession, well, the Fed's going to have to cut rates at some point, right? Which means that it's almost inevitable that TLT will rise as rates come down, as yields come down at some point. Do I care about when? No, but it's like a recessionary hedge type of trade. Things like that from like a macro perspective, I think I love doing there. And those are things that I can leave on. I don't have to worry about them. They're not, there's no time expiration on those. I let them do their thing. And then I can just focus on the day to day, which is a lot more fun, I think, and can be something that you can replicate without having to like hope and pray, right? It's either this or it's this, and that's it. So we shall see how it all goes into next year. I don't know why I got this on. I flagged that for whatever reason. Yeah, let's go to SPY here. Yeah, it's pushing up into the close. It still looks like a bear flag to me on the daily, but then again, who knows? Put call ratios today popped to about 1 point. Yeah, hit almost 1.19 roughly. The 5-day moving average of the put call ratio, the 5-day average, not moving average. Check this out. We're still up there, right? We're still at, we're still at 1.10 right now. We were super high. The thing is, this indicator, we say it now, and of course, maybe it actually will pan out to be a good indicator. This indicator it seems like not going to be as useful as it has been in the past. And I think that has to do a lot with the recent influx in these short-term options traders that have come into the markets. And I think what you've seen is like a lot of people went from small caps, being able to play penny stocks and whatever, into options as those markets fizzled out. Those who survived and who stick around will have kind of fizzled into options or kind of moved into options, which has added to a lot more of the volume that's traded on these options, at least in the short term. Now, I don't really know how many of these people are actually betting on like substantial downside and they're playing, long-term puts. Realistically, I think this has to do a lot with the short-term trading that we're seeing. And if we get a couple of, weeks of upside, I would imagine this comes down substantially because you're going to have a lot of short-term traders probably playing off that upside momentum, especially if, on the S&P on SPY, we got a break up over that upper trend line that's been the resistance this entire year. If we get something like that, then now that can change things pretty quick, I would think. ACHL, BAM SEC. Let's check it out. Let's go to FinViz. Let me just pull this up too so we have a little FinViz look too. Check FinViz quick. That volume is nuts. Presenting at a conference, phase updates, yada yada. Okay. Let's check out BAM SEC. BAM SEC. Achilles Therapeutics. Raw Capital Management. A couple of these 13Ds filed. 13Gs. That was those early this year. So let's check these out. What is this? What is this guy got on it? Share voting power of 4.1 million shares, roughly. Aggregate amount owned of 4.1 represents over 10% of the company. Okay, well, so that's the first piece. Let's check this one out too. About a week later, they filed this one. 2.9 million, so it's about 7%. Raw capital management. So does that mean that they dumped, like 1 million shares, roughly speaking? Potentially, if I'm reading that right. Because they had owned 10, now they own 7.27%. is what it seems like. Let's see if we can read a little bit further into this. That's the thing that kind of sucks, though, when it comes down to, oh, here we go. Transaction, they got some sells. So here, healthcare fund, RA Capital, healthcare fund, dumped some shares, 81 cents, 86 cents, a buck. Nexus fund, they've been dumping some shares into the market a little bit here. Well, that's going to cause some of that higher volume, right? Well, but the thing is that's interesting is that someone's buying it, right? So ACHL, right, has been around this. Let's see. This fell down to 75 cents. Then it popped back up to about 96. So what is that? There were some sells here on the 16th at 106. Where is that? How did you get to the 10? Oh, that's up here. The 16th is a big sell day because that was a big candle to the downside. 106. Geez. That dumped the stock down, but it's been getting bought up even more volume since. So to be honest, I don't know too much about like the dirty kind of underworkings of how this stuff works, because I wouldn't be surprised if this is also a form of manipulation in terms of like they're dumping this, but someone's buying this. You know, they had a crap ton of shares, so it's essentially, you know, a dump of a crap ton of shares, but someone's still buying these shares. And like, if they were to dump this thing, right? If they were to dump the amount of shares that they've been dumping, which we're talking about hundreds of thousands of shares over the past couple of weeks, right? Well, that's the beginning of these sells, or some of this sells was at the beginning. But someone's buying those shares. And if they were to do that and dump all those shares, based off the volume that this stock traded, it wouldn't be possible. It would not be possible. So there's got to be someone under the surface here who's buying this, and I wouldn't be surprised if there's, you know, more games being played on the surface. But yeah, it seems like that's partially why, or start of the drop, but that we've seen a lot more of them unloading shares, or at least selling some shares the past couple of weeks. Someone's been buying them. Kick it into overdrive spot. Yeah, it's going straight up. Power hour rally, guys. I mean, let's see. Market now just closed as we're looking at that ACHL. But look at this. Closing at the highs on SPY. Pretty good volume just came in towards the end of that. Let's check the volume on the past couple of days. Volume-wise, it's still pretty low day today, just generally speaking. But Tuesday was the lowest day of the week on SPY. 51 million shares. We had a good amount of shares, about 70 million on Wednesday. 67 million on Thursday, and then today about 55 million shares traded on SPY. To finish off this week, we pretty much got close to that gap fill on SPY to finish it off. I'm very surprised that actually happened. These were the contracts that I had today that I got stopped on. I had played it when we got above VWAP midday and put a stop loss and left, and that was essentially, I had an average of like 590-ish, something like that. Got stopped out at like 570 or 560 something. And then it came down to 475 roughly. So yeah, it got stopped out, I guess, at a good time. But had I stayed in, or had you bought there from like the 470s to a sub $5 entry, you know, those contracts, and these are 378 SPY contracts for next week. Those went to $7+ My goodness. Pretty killer. I'm sure you could find even crazier ones, you know, if you were to go to, like, I'm curious what today's expirations look like around 380. Let's just look at the 380 strike, because I'm curious, because they finished at $2.60 roughly. Yeah, these are nuts. Absolutely nuts. Check this out. These were down at 26 cents at one point today. My goodness. And then finished the day up here at like 250-ish roughly. So that would be about almost 1,000%. You know, casual 1,000% here to finish off the day on a SPY contract. I would love to get it at some point, 275, even more. I would love to play that stuff, but the problem that I have is that the consistency is just not there, right, in terms of playing those super short-term expirations. I'd rather just play with heavier size and be fine, you know, on whatever I'm in, and, you know, the move is the move. But when you're playing out the money contracts, or at the time, right, we were like an hour or two from close, and we're about $1.50 below that 380 strike. That didn't look too good. We got a massive move into the close. Boom. So what about the old Santa Claus rally, right? How do we even get the Santa Claus rally? Well, take a look at this. The Santa Claus rally ended up being, let me jump back to TradingView. Our Santa Claus rally, the hyped up Santa Claus rally, ended up just being a period of absolute chop and consolidation. And so it wasn't like the Grinch came. It wasn't like Santa came. Just no one came. We got nobody to come. Nothing happened. We're going to finish this week at 382.40 or around 382.50. And we finished last week around 382.90. So a full week of trading, yeah, we got some moves up and down, but we pretty much are finishing at the exact same spot of last week. Here's the weekly chart. Yeah, I mean, here's the weekly chart on SPY. Like 2 doji candles that are essentially, we opened and closed at within the same dollar on SPY the past 2 weeks. From the open, the range has been bigger, tighter range this week, but this is also technically like an inside bar, right? I guess you want to call it. We're inside of the whole week of last week's range. So ideally, right, you're looking at a trigger of over 387 or under, 375 would be like a trigger for that weekly candle bar into next week. So we'll see. 375 or 387. What's going to come first? You guys be the guess. Take a guess. Jeez, these freaking absolutely ridiculous spam comments. My goodness. You got to love it. 69mega.com. Yeah, you got to love that. Like, Jesus. Hide user on this channel. They'll be never seen again. Okay, cool. Fun little rally. Stop trading the open more on the power hour. I'm going to look through. I found on my small account that I've been doing, I'm essentially red every time I trade the small account in the afternoon. Like it's like red every time, or not every time, but generally red. Whereas the morning is green, a lot more consistently. Yeah, these spammers, man. I haven't had to do that to many people at all, but it's funny. It's funny. It's really funny too. Oh yeah, this is like completely besides the point, but it's funny how this stuff kind of works, because just like anything else, and then spammers aside, right? I'm more so talking about a lot like the negativity and hate and crap that you'll see, because for whatever reason, especially on like Twitter and stuff, like for whatever reason, someone does something or posts something or whatever, and someone's got to critique it or be like, oh, this, you're an asshole because of this and this or whatever, right? But like it legitimately and like 100% does absolutely nothing but make the situation worse for you and others. It does not. There's nothing constructive about any of that stuff in that frame, right? So the people who, not many, but I've had some people who just like are super annoying when it comes to that. And like over time, it's like, okay, well, we got to cleanse this stuff out. I haven't had a big issue, but it's like, we don't need someone, hanging out. There's not many of us who hang out on the streams. We don't need someone on the streams who's going to be like, an asshole, right? If you don't like it, like you can just not watch, don't join, like don't do it. Like just turn it off. Like, you know what I mean? It's not for you. Fine. This thing today, driving home from the gym. So I'm pulling through a light. This guy, the intersections are kind of wild because there's like 2-3 lanes, and like he was coming out of Culver's, of course, and he had to cross like 3 lanes of traffic to then get to like the median, to then get into like the traffic that was going the way he wanted to go. And so he does so, and does it very, very slow because he was trying to be cautious, and it's like a lot of traffic going on. People are out and driving and stuff. And so like I could see what happened. He kind of did it slow, cut a guy off. Guy was pissed, right? Everyone probably would be, right? So he's on the horn. The guy's on the horn. He was on the horn for like the entire next series of road, like the whole mile down the road on the horn, just laying on, right? Then I'm like, 10 car distance back. I was like the next car behind them. I watched it all play out. Next car back. So then the car who cut him off is going to a turnout, right? Not at a light, like a little bit of a turnout on the road to like U-turn or cut into like a shopping center. So the guy who honked, who got cut off originally, right, is pissed. He's riding his ass the whole way, holding the horn down while we're driving, 45 miles an hour down the road the whole way, just riding him within like, a foot of this guy's bumper, it seemed like. And I'm like, okay, I understand you're pissed, but dude, relax. Like, what are you going to do, right? It is what it is. You didn't crash. Okay, move on. Guy made a mistake. Sure, he hears the horn. I'm sure he's got it. He's understanding. He's like, he feels bad, whatever. Then he stops his car in a 45 mile an hour, road. He stops in the left lane while the guy's in the turnout lane to yell out his window. And I'm behind him. I'm like, holy, what the fuck? I'm honking on my horn because I'm about to crash into this guy. And then he goes back on, swerves out, and drives away. It's like, you got, by being an ass, yeah, you can be pissed, whatever. But by being an additional asshole, you could have caused so much more shit. If I hadn't seen that whole thing play out and know this guy was pissed and whatever, I probably would have crashed into him because I had no idea what was going on. You stop in the middle of the road. I'm not expecting a car to stop in the middle of the road for no reason, right? So it's like, you get nothing. You're just compounding the situation. And potentially, from a situation that had no crash, you could have caused one because you're an asshole. So hopefully, right, the takeaway is there's no point. You're pissed at yourself, fine. Pissed at someone else, you're pissed at this, the market, this and that, fine. But there's no point of letting that thing nag on you because it's not going to get you anywhere. You got to turn the page. You got to turn the page and move on. All right, the sun will shine tomorrow. Market will be there tomorrow, right? In terms of the market, all that good stuff. So hopefully, this next year we have a nice year. Whether it's up or down, right? We can take a lot from this past year and move on, turn the page, and learn from the mistakes and be in a better position, right? We'll see. We shall see. It's crazy that people get mad. I mean, when driving gets there, I could see, but it's like, I agree. Like, we've all made the mistakes. We've all done it. I understand being mad. And I guess if you're in a bad mood, you can be pissed and you have the right to be pissed, whatever. But those situations, to me, it's like, dude, you have to understand the surroundings and you have to understand your situation. By doing that, you're going to cause more problems, road rage. I was ready for the guy to get out of the car and just start running over and trying to fight this guy for whatever reason. But it's that's only going to cause more problems later on. You guys didn't crash. It is what it is. Move on. Same thing with the market, right? You didn't, if you're still here, you didn't lose all your money. And if you did, right, guess what? You can always make more as tough as that might be, especially for those who might be struggling and whatever, especially in a recessionary time, right? Next year, who knows how things play out, but you can always make more, whether you have to get a second job, a third job, fourth job, or you got to cut your expenses. You can always come back from it. But when you sit there and you sulk about it, it's not helping anyone. Really. Super angry at I was pissed at mine. I did some stupid stuff, but I think I've gotten into a much better mindset, right? Of tomorrow's another day, next week's another week, next week's another year, right? So we'll see. Enjoy New Year and the holidays. You too, my man. J Powell is going to be a spew from his mouth and Channy. Yeah, we're going to get some let's check out the economic calendar for next week. So Monday, market's closed. We have S&P U.S. manufacturing PMI, construction spending, job openings, quits, FOMC minutes on Wednesday at 2 p.m. That's going to be fun. That's going to be the more detailed report of the last FOMC meeting. That's all it is. But that's coming out, so market could move off of that. Employment report, jobless claims, payrolls, unemployment rate. We got some good data coming out next week. So after Monday, no market on Monday. We'll see what happens Tuesday, and then I think we got some potential better direction by Wednesday. By the end of Wednesday, we'll see where we're at, but we can get a better sense of direction by then. So we'll see. We shall see. 2023. Let's get our stats up. 100. I think. Everyone has, I don't need to bore people with goals and stuff because it's okay, everyone's going to say the same, crap. Here are my goals for this year. Okay, cringy type stuff. But realistically, right, you got to be serious about taking the stuff into your control. And the biggest thing that I think, as much as this was a red year for me and it whatever. I guess, oh, taxes, that's great. I get cool, right? So you don't even you want to be paying taxes in a sense because you want to have a tax bill because that tells you that you did something right, right? You don't want to have a red year and technically not pay taxes. I guess everyone to each their own, especially if you're a long-term investor focused, whatever. But the biggest thing from this year, I think that I got a much better handle on myself is taking it into my hands rather than letting it become, the market's up to the market, which is like in the long run, that's fine. But in the short term, that's not what I want to be doing. It's not a consistent strategy, number one. Number two, mentally, it's horrible. Like it's one of the worst mental years I'd say I ever had. I had been someone who has probably been one of the more, I don't want to say always been positive, really more so since mid college on. I don't know what it really was, but I attribute a lot of that to getting into like certain types of music. I used to be someone in high school, because you go to high school and you're like, oh, rap is cool, and that's what you listen to and whatever. That's kind of how it came from me. And then I went to college and I was like, why was I listening to that stuff? I didn't like it. Maybe you do. I'm not saying that stuff's bad. Everyone has their own taste. But I was like, why did I listen to that stuff? I didn't really like it. I was just listening because everyone else was listening, right? Is kind of what I was in the feel of. And then I got into my own stuff and started listening to different music that was much more, I don't want to say upbeat. It's not the right word. But it was much more like less derogatory and more like subconsciously derogatory inside what's being said, whether you realize it or not. And a lot more like euphoric in terms of like the way I don't know. I think of like EDM and stuff as more euphoric. There's different types, but not the super hardcore stuff. More of like, I don't know how to describe it, more euphoric stuff, nostalgic throwbacks, like that type of stuff was more interesting to me. And it was like an interesting kind of take on things. But I've generally been pretty like positive. I haven't had any mental like, issues like depression issues or like those issues. It's just not something that I've had to struggle with in the past. But this past year, I think a lot of it came because I felt so much like this past, even like, end of last year too, was that I wasn't in control. And I've, from my whole life, right? Things like working out, things like school, I always felt like I was able to control it, right? If I was willing to put in the work and put in the effort and do what I have to do and seek the help and get what I got to get done, seek the information, I can do what I have to do and I can get it to where I got to be. But I felt like this past year, I had not been doing that. I was kind of letting the market take me wherever it was in terms of the portfolios. This is just like one aspect, I guess, of life or whatever was going on, right? In terms of the portfolio, financial side of things, I was letting the market take that and do what it wants with it. And I'm like, that's not what I want to do. Like, you might not care. That might be for you. That might be how you want to do things and be a long-term investor. And that's it. Just kind of slowly compound money, make your money doing this. You have a job, business, or whatever. You make your money here and you just use the market as a vehicle to compound that money over time. You don't care about uptrends, downtrends, technicals, stock market, recessions, none of that stuff. That's totally fine. There's a place for everyone. But for me, I'm very technical in nature. I like to analyze things and just that's how my mind works. And so I wanted to be in control. Also, I wanted to be in control of that, because I just hate when I can't move forward, or even on a red day or a red week. What do? You can still take something away from that and move forward, because guess what? There's a reason why you were red. For example, this week was just, I had a good start, got chopped. Next year, right, during this holiday week, there's no point. I gotta head out and I got someone coming to the door. But I'll see you guys tomorrow's video. Okay?